The Reserve Bank of India paused its rate cut cycle on Friday, leaving its key repo rate steady at 5.25%. The February policy pause was on expected lines and comes after 1.25% cumulative rate cuts through 2025. Currently, the repo rate is at the lowest since July 2022.
The MPC voted unanimously to keep the policy repo rate unchanged at 5.25%. Consequently, the STF rate remains at 5% and the MSF rate and the bank rate at 5.5%. The MPC also decided to continue with the neutral stance.
RBI Governor Sanjay Malhotra cited slightly higher inflation projections than previously thought and strong growth for keeping rates on hold. However, he said that inflation was in control. Malhotra highlighted that the evolving macroeconomic conditions will guide the RBI's policy path. The governor said the RBI faces a more supportive external backdrop, even as global macro and market narratives continue to swing. The RBI said the economic survey's concerns on global risks have eased. That is aided by the EU deal and a start to US-India trade resolution, which should help stabilize the current account, foreign inflows and the rupee.
Going ahead, the Reserve Bank will remain proactive in liquidity management and ensure sufficient liquidity in the banking system to meet the productive requirements of the economy and to facilitate monetary policy transmission. Liquidity management would be preemptive, with sufficient allowance for unanticipated fluctuations in government balances, changes in currency in circulation, and forex intervention, etc.
Reflecting on the economy, Malhotra said that India continues to outperform expectations and retains its status as the world's fastest-growing major economy. The RBI raised growth forecast to 7.4% from 7.3% for fiscal year 2026. He also highlighted a boost to manufacturing momentum from focused spending announcements in the budget. The central bank also increased its inflation projection to 2.1% for the next fiscal year. While Malhotra flagged an upward bias for inflation towards the end of the year, he said that price pressures remain well within the central bank's target range. The governor, however, flagged the volatile precious metal moves as a risk to the stable price trend bets. Still, the RBI expects inflation to normalize gradually and closer to its medium-term target of 2 to 4%. For the RBI, monetary transmission of rate cuts has remained a key concern. While banks usually pass on rate hikes almost immediately, the transmission of cuts takes longer to reach the end consumer. The RBI has elbowed and nudged banks to cut borrowing costs and boost demand over the past year. Malhotra signaled victory to the central bank's silent attempts and said the effective transmission rate is at 0.94% versus the 1.25% cut in the current cycle. India will get a fresh statistical lens on its economy with a base year for calculating data sets for change. The governor highlighted that monetary policy will now be guided by the new data series for inflation and growth. The change calculations are set to be effective for data releases in February, and Indian markets more or less shrugged off the RBI announcements and extended losses from Thursday, driven by a broad sell-off in global stocks. The Sensex fell over 360 points to its day's low, and the 52 shed about 0.5% to its intraday low.